Welcome back. In our previous class, we were able to look at comprehensive commercial vehicle insurance. So now, in this class, we're going to look at comprehensive PSV vehicle insurance. So, as you can remember from our earlier class, when we discussed about PSV, we noted that the main difference between PSV and the other types of vehicle insurance is that for PSV, this is the only type of insurance that compensates the passengers within the vehicle, and that's why you have to get an additional insurance, which we refer to as the passenger legal liability, and often in short, it's called PLL. That's standing for passenger legal liability. So the way it works, you definitely need to also understand our earlier differentiation between the types of PSVs. So we had the chauffeur driven, which is mainly the ones using the apps. We also had the ordinary taxis, which you just order directly on the road. We also had the car hire, which we also called self-drive PSV. And finally, we had the Matatus, or rather the public vehicles, public service vehicles, carrying in most circumstances more than 7 passengers and above at any particular time. So for the first three categories, the PSV chauffeur driven and the PSV normal taxi and the PSV self-drive, the mode of calculating the premium still holds the same. The rate might be different depending on the insurance company. Some might charge lower for the PSV chauffeur driven, which are the ones using the apps, than the ordinary PSV taxis. But comprehensive insurance still works the same. Look at the vehicle value, get the percentage, multiply it, and then from there add extra benefits. But before adding the extra benefits, always add the passenger legal liability insurance. So in most insurance companies, this is charged per passenger, and the passengers refers to the total carrying capacity of the vehicle. So if your vehicle has a capacity to carry 4 passengers, you need to pay public legal liability for 4 passengers. So at any given point in time that your vehicle is involved in an accident, a maximum of 4 passengers are supposed to be compensated if they're being carried within your vehicle. Then this is, under most circumstances, charged a flat amount, which is 500 Kenya shillings per passenger. So let's say, using our same example, our vehicle value is 1 million. The insurance company has told us, in this case, since it's a PSV, let's say a chauffeur driven, they'll charge us 6%. So we multiply the 6% times the value of the car, which gives us 60,000. Now once we get the 60,000, we need to pay for extra passenger legal liability. So let's say it's an ordinary saloon car. An ordinary saloon car has 5 seats, 1 for the driver and 4 which can carry passengers under most circumstances. So we need to get 4 times 500. Now we have an extra 2,000. So add the 2,000 to our earlier 60,000. Now we have 62,000. With that, we can also be able to purchase additional benefits. So for a PSV vehicle, the additional benefits often purchased include excess protector, which you mentioned earlier, and political violence and terrorism. For this, it's good to note also that you can't purchase courtesy car insurance, since this is a vehicle used for business under most circumstances. So at the moment, we haven't come across any company giving this as an extra benefit, but in future some companies might innovate and think it wise. In the event that this vehicle is garaged or being repaired, you can purchase an extra insurance for it, but at the moment you can get a courtesy car when the vehicle is being repaired. So under most circumstances, always good to remember, if it's a PSV, first mandatory, you need the passenger legal liability paid for. Then you can add extra benefits one being excess protector, another one being political violence and terrorism. And you can also look if the particular insurance company offers additional benefits which might interest you or be valuable to your nature of business. Crossing over to the Matatu. So for the Matatu, it's calculated quite differently. Since Matatus are perceived to be of higher risk, their third-party insurance is substantially costly. So in most scenarios, most Matatu owners have to pay their third-party insurance separately from their comprehensive insurance. So the way it works is they pay the third party on a monthly basis. Let's say for a 14-seater, they may be paying roughly 9,000. And it's also good to note very few insurance companies accept Matatu insurance. So only specific insurance companies offer this type of cover. So once they pay for the third party, which under most circumstances they pay for monthly due to the nature of its costing, they can pay annually, but it's a substantial amount. Once they pay for this, if they want to insure the actual vehicle, they go ahead and purchase a different type of insurance cover, which is called a motor asset insurance. So the way this works, this is only insuring the asset itself. In the event of a loss or resulting into damage, or in the event of theft or fire. So these are very different type of insurance. So for this, you don't get a certificate to display on the vehicle, but you only display the third party certificate. But if you want an extra insurance to cover the asset itself, you have to insure it separately and pay a different amount for you to cover the asset. So it's always good to know that out of all the types of motor insurance, this Matatu insurance works quite differently. With that being mentioned, finally we can look at how to get the premiums for the motorcycles insurance, and from there now we can dive into some practical examples. Okay, now see you in the next class.